Most of you will not be able to spend even $60,000 per year after you retire. Why is that? Well, those are just the statistics. Most of us, more than 90% of us, will not lead a financially happy retirement. And the reason is that we didn't do enough to invest in our compounding assets and create our wealth now. That is the reality. If you want to understand these statistics and you want to know what you can do about it, even if you're risk averse, then that's exactly what I will be covering over 4 charts in this video. If you're interested, carry on watching. My name's PK and I help people build passive income using the Property Investment Accelerator, using data without needing a $15,000 buyer's agent every single time. In this channel, we discuss financial happiness, we discuss property investing, and we discuss the economy. So subscribe now and let's go. Now, before you're absolutely repulsed by a property spruiker carving out reasons why you should be investing in property, I want you to look at this chart and I want you to connect with it, right? Stick with me. Savings targets for pre-retirees aged 55 to 59. If you will own your own home when you retire and you live either by yourself or as a couple, and you would like to spend this much in retirement, let's go the per year, $34,000, $44,000, $55,000, $48,000 as a couple, $64,000 as a couple, or $81,000 as a couple. Okay, you think about what your aspiration is for when you retire by the time you're, 65 or 70 or whatever that is for you. Okay, make this personal, personalize it to yourself. Then you need to have saved this much by 65. Okay, on top of your income from the age pension. On top of the pension, okay? So if you're by yourself, $55,000 every single year after you retire, you need to have saved up $745,000, excluding the age pension, and assuming you have a own home paid off, okay? You can't just use this money to pay off your own home. It assumes that you have $745,000 plus a paid off home. If you do, by the time you're 65, then you'll be able to spend $55,000 per annum. That will be your disposable income. Now, just ask yourself, is that realistic for you? And the second one is, if you're a couple, I won't even take this 81,000 one, right? If you're a couple and you just want to have the ability to spend $64,000 by the time you're 65 and you're a couple, excluding the pension and assuming that you have your own home paid off, you will need to have saved $402,000 by the time you are 65. And once again, ask yourself, is this realistic? And I also want you, I don't mean to be causing unnecessary pain, but hopefully this serves as like a jolt to get us out of our, our lethargy about our finances. Assume the right assumption that these numbers in 10 years' time, 15 years' time, 20 years' time will be much higher because of inflation. This is not inflation adjusted, right? I mean, what is $64,000 going to buy you in 20 years' time? Who knows, right? So the reason I'm sharing this is that investing is no longer an option, guys. It's a necessity. It is an absolute necessity because more than 90% of Australians live off the pension when they retire, and everyone knows that $30,000 doesn't get you much. And in 20 years' time, is it going to be still around? Who knows? And inflation adjusted, what is that $30,000 really going to get you in 20, 30 years' time? Who knows? Now stick with me on this next chart. So you're asking yourself, well, what do I do about it? Well, here's one chart I would like you to understand. This is the residential real estate vacancy rate in Australia. See how this is tracked since 2012. Okay, 2012, it was pretty low. And then it went up, 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 up. Remember, we had a huge property boom between 2012, 2016. But despite that, vacancy rate went up, 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 up. And since 2016, because of many reasons, I've talked about them before, APRA clamping down, borrowing capacity clamped down, Royal Commission, etc., governments and regulatory authorities made it really hard for property investors to invest in property. And therefore, they didn't. And therefore, vacancy rates came all the way down. This is record low vacancy rates right now. Okay, so this country, Australia, this beautiful country that we all so grateful and lucky to live in, it has a chronic housing shortage. That is a problem to be solved. You know, you get rich, or I don't want to use the word rich because it seems a bit sleazy, but you build wealth in life by solving a problem. The problem, more so than probably anything else right now economically in Australia, is a lack of housing. Right now, the vacancy rate is at record levels. People having to camp out, you know, single mums with 2-3 kids can't find a place to rent. Rents are This is the problem, a housing shortage. So we're at this unique point in history where not only do most of us not have enough money to retire, but this country doesn't have enough housing, okay? So you put 2 and 2 together, that is your opportunity to solve a social issue and create wealth, passive income, residual income, so that you can retire comfortably. Check these out. This is from John Lindemann, courtesy of him. Potential rental shortages or surpluses in just this financial year and upwards and onwards. In New South Wales, they're anticipating a shortfall of 4,000 dwellings. Okay, 4,000 dwellings in the rental supply. That means there are, you know, let's just say assume one person lives in one house. It's not quite like that. But 4,000 people aren't going to have a place to stay. That is the chronic lack of housing in New South Wales. Victoria, over 3,000. Queensland, almost 2,000. South Australia. I mean, these are big numbers for a small state from a density and population perspective, like South Australia. And these others have a bit of a surplus, okay? So these red areas, this is where there's an opportunity. Of course, that doesn't mean that all of WA has a surplus. There are markets within markets, but I'm just trying to illustrate that this is the problem that exists. And mind you, right, this year, okay, there are going to be 200 to 300,000 new migrants coming into Australia, just like there was back in 2019 before COVID. There was almost 300,000 migrants coming into Australia. These guys need a place to stay. There is already a shortage. That is the chronic housing crisis. You and I need to build our wealth, our passive income, our residual income that carries on even when we don't work. We don't trade time for money. We need that to build our retirement, annuity. Put 2 and 2 together, guys. This is a golden opportunity for property investors to do something that not only helps themselves, but helps others. And the last thing I'm going to say is, even though that makes logical sense, 2 and 2 together, if you don't do it, someone else will. Okay, it's not like the world or Australia is waiting on you and me. Someone else will solve this problem, because in solving a problem, they will make money. Millionaire migration, hopefully this is okay to read, but in 2022, there is an anticipated 3,500 millionaires migrating to Australia. Okay, over the last 2 decades, there has been 80,000 millionaires that have migrated to Australia. All the green areas in the globe are where millionaires are migrating to, and all the red areas in the globe are areas where millionaires are migrating from. Okay, so there's a big exodus from both Western and Eastern Europe, big exodus from Central South America, from the Middle East, from India, China, South Asia. Where are they going? They're going to the US, they're going to Canada, they're going to Australia, they're going to the New Zealand, because these are the most stable countries politically. That is where capital flows. That is where big money flows. So this is a problem right now. It's not like no one knows about it. There's a housing crisis, not enough houses in Australia relative to demand. Millionaires, they know what's up. In fact, there's a statistic, of people who are millionaires, 90% of them used real estate to get there, and they will continue to use real estate because that's what got them there in the first place. These 4 areas in the globe, that is where millionaires are going to. 3,500 millionaires in 2022 into Australia. So if you don't solve the problem, someone else will solve the problem, and they will get even more wealthier. So I ask you the question, and I don't want to come across as a property spruiker, invest. There are times where we shouldn't invest in certain markets. There's always markets within markets, but ask yourself the question, there's a problem to be solved. The government ain't doing anything about it. So who's going to solve it? It's people who see the problem and see the opportunity to make money from that. That should be you. And that doesn't mean you need to buy $1 million property. You can buy 400K, 500K properties, slowly chip away at the problem and set yourself up for retirement. Because if you don't, even after you've watched this video, most of you, just statistically, I wish you, nothing like this, but most of you will not be able to have $50,000 to retire per year after the age of 65. Statistically, that's true. So do something about it. I'm always grateful to you, my community. Give this video a thumbs up. And if you're new, hit the subscribe button. I super appreciate it. And always, always, always remember, before you invest in anything, even if it's something I've alluded to, invest in yourself. Because, these 6 inches between your ears, they are the most valuable real estate you will ever own. So knowledge is power, and the point of power is in the present. Okay, so level up, join my Facebook group, more than 20,000 investors, brilliant people in there. I'll leave a link in the comments, and also to my podcast on Spotify, Google, and Apple Podcasts. My name's PK, and I just always wanted to say that, back yourself and go hard. Catch you later.